Good morning, Vadanda. This is Dr. N. Vijay Jyoti, Associate Professor, Department of Management Studies, Gayatri Vidya Parishad College for Degree and PC courses, Rushikonda, Vishakhapatnam. Today I want to discuss with that classification of insurance. Generally, insurance is nothing but a contract between the two parties according to the legal sense. Contract means here two parties are involved. One party is the insurer, another party is the insured. Insurer is nothing but a insurance company. Insured is nothing but an individual who are taken an insurance policy. Both the people agreed and entered a contract. According to the contract, insured people will pay some amount to the insurer. So, whatever risks, whatever losses, whatever contingencies they have in their life, so that risk, that loss should covered in terms of a financial compensation according to the term. So, that is a contract between the two parties. So, according to the classification of insurances, what basis they have to classify? Generally, every person having a different type of risks we are having. The risks may be insurable, maybe non-insurable. Different type of contingencies we have to pay. But according to our requirement, the insurance company will offer different type of policies, and based on that, whatever risks we are having, whatever losses we are having, and that loss should be indemnified the insurance company whenever we are paying some premiums to the insurance company according to their subject matter. And according to the classification of insurance, it should be divided into life insurance and non-life insurance. According to the life insurance, it is nothing but a life. The subject matter is nothing but a life. According to the non-life insurance, other life, whatever insurances, whatever risks, whatever losses we are having, that should cover through a non-life insurance. According to the non-life insurance, also it should be divided general insurance and miscellaneous insurance. According to the general insurance, generally general insurance is mainly concentrated on marine insurance, fire insurance, motor insurance, personal accidental insurance, health insurance. According to the miscellaneous insurance, it should cover the fidelity and crop insurance, burglar insurance, casualty insurance, and a cash in transit insurance. They should cover through a miscellaneous insurance. And according to the life insurance, so generally this is a contract. According to the contract, here insurer will give you some consideration. What consideration they have to give? So insured people will pay some premium to the insurer according to their requirement. Maybe they can pay lump sum amount, maybe they can pay periodical. According to the periodical, maybe you can pay quarterly or yearly, annually. You have to pay the installments. According to that, whatever risks, whatever losses you are having, and according to that, the insurer undertakes to pay. So whether on the death of the insured or on the expiry of a specified number of years. So according to your policy, suppose you are taking a term life insurance policy, the term should be covered 30 years. According to the 30 years, whatever risks you should have, according to the life, mainly the risk it should come under the life. So suppose these 30 years the person was demised. According to that, whatever amount you are issue, whatever amount you are taken as a policy, and the whole amount should be paid to their family. And suppose the person was alive up to 30 years, the matured amount should be paid to the other person. So according to that, it should cover the life insurance. Generally, according to the life insurance, we have a different type of life insurance policies we are having. We have a individual life insurance, term life insurance, endowment life insurance, unit linked insurance policies, and pension scheme policies. We have a child plans, everything we are having. And generally, according to the life insurance, whatever risks you are having, you should be compensated by the insurance, but it won't indemnify. Indemnify is nothing but a loss. Generally life that won't indemnify, because of that is a human being. How much amount we have paid, also the life won't come back. So that's why this is indemnified. not indemnified. And generally, whichever is earlier, an annuity or a specified amount should be paid by the life insurance policy holder. And according to the non-life insurance, this is a contract. Insurer, in consideration of premium paid by the insured, agrees to indemnify. Here, indemnify, what it means whatever loss occurred due to that risk, that all loss should be paid by the who are insured people. So that assurance will be given by the non-life for a financial loss suffered by him due to an adverse event which is covered by the terms of the policy. According to the terms and conditions of the policy, what indicates and everything should be fulfilled whomever taken as the non-life insurance. According to the non-life insurance, it should be classified into a general insurance and a miscellaneous insurance. According to the general insurance, mainly they should be concentrated in the concentrated and mainly concentrated in the house, car, bike, health, travel, etc. So house it will come under the any property while we are ensuring that whatever risk is should be happening. Suppose the house was destroyed by fire, that should be covered with the fire insurance. Suppose we have a car, the car was damaged because of an accident, it should cover by the motor vehicle. And a health insurance, health policy. According to our health was maybe we are facing some health problem. It should cover with the health. Travel, miscellaneous insurance it should cover. All those insurance policy, all those risks should be covered, and according to that, whatever financial compensation we are having, that should be paid by the insurance company through a general insurance. According to the general insurance, it should be divided into marine insurance, and based on the marine insurance, mainly it is a contract as an agreement whereby the insurer undertakes to indemnify the assured in the manner and the extent thereby agreed against losses incidental to marine adventures. Generally, marine insurance will taken by the who are doing having a any ship owner, any cargo person, any freight charges. Those people have to take a marine insurance policies. Whatever adventures happen, that risk should be compensated through a marine insurance. According to this marine insurance policy, mainly they have a three type of policies. We have to take vessel insurance policy. Vessel means a hull. The ship of the insurance should cover while we are taking the hull insurance. According to the cargo, whatever goods, whatever commodities, we can send one place to another place. That time whatever risk should be happening, for example we have a goods, the good will be carried one place to the another place. Unfortunately, the good was destroyed because of sea water enter into the goods, or otherwise the good was theft by some robbery. So because that type of risk should be covered whenever we are taking a cargo insurance policy. And another one is the freight insurance. Freight insurance is nothing but, so whatever charges we are paid, we are carrying goods one place to another place. Suppose the freight charges paid before that time we didn't have any risk, but we are not paid in advance, we are paying after reaching the good at the destiny. Maybe unfortunately the vessel was destroyed, the good was damaged, the good was theft by any robber, or theft by the another people. So that time the risks we are having, that's why we should cover while we are taking freight insurance policy. All those policies should cover according to the marine insurance. And according to the fire insurance, this is also will cover whatever properties we are having, and whatever goods we are having, and whatever places we are having, anything will be happen because of a fire, that risk should be compensated, and the risk should be indemnified the insurance company while we are taking the fire insurance policy. According to this contract, whichever insurer agrees to indemnify the insured in return payment of premium in lump sum by an installment. So we can pay in a premium maybe installment basis, or what about that we can pay lump sum, and whatever losses we are having it should be recovered from the insurance company according to the our risks suffered but due to any destruction, any damage, any lightning, any explosion, or any landsliding, or any what about the terrorist attacks. All those we should cover through a fire insurance. And one more thing I have to tell that the general insurance policies, whether you are taking a marine insurance, whether fire insurance, whether motor insurance, whether health, whatever it may be, so all these policies, whatever risk should be happening, the risk should be covered in a particular period of time. That is nothing but an accounting period, that is nothing but a one accounting year. Maybe according to the policy will take it, maybe you have to take a April to March, or you have to take a Jan to December, whichever period you are taking, the particular period, whatever risks, whatever losses you are having, that loss should be compensated by the insurance company through a financial nature, so that it will considered according to the general insurance. So mainly fire insurance, maybe it should be distracted, any lightning or an exposed, any what about the destroyed, or otherwise any damage, anything will be happening due to a fire, and that should be indemnify the insurance company. So according to our property we have to take a fire insurance policies. And according to the motor vehicle insurance, according to the motorcycle act, the main objective for introducing the motor vehicle, it is a safeguarding the financial interest of a persons who were injured or killed or suffered damages due to the negligence of a motorist and other risks associated with the use of a motor vehicles. Generally, according to the motor vehicle, what we people should be concentrated that unfortunately the person was injured, unfortunately the person was killed. So because due to a negligence, so that time whatever risks we are having, that risk should be compensated and according to the motor vehicle insurance policies. Mainly, this policy was introduced to not only cover the risks towards the owner and the vehicle, but also cover the financial liability that may arise from an accident injuring a third party. Because of our person, because of our vehicle, the third party was injured or the third party were killed. So that time, whatever risk, whatever loss occurred, that loss should be compensated through a motor vehicle insurance. Maybe the motor vehicle it should be, we have a private vehicles, we have a own vehicles, we have a commercial vehicles, but whatever risks we are having, that all the risks should be covered through a motor vehicle insurance. So according to our owned vehicles, what we have, maybe we have a two-wheeler, we have a four-wheeler, so maybe any damage was happened, any scratch was happened in our vehicle, so that time it will incur so much of costs on that, but that costs also we can compensate it from the insurance policy. Suppose our vehicle was damaged because of hit by the another person, but that time whatever loss it should be happening, the third party insurance also should be covered through a motor vehicle. But we have a commercial vehicle, so that commercial vehicle is nothing but the goods carry, maybe the passengers carry, the other any garbage carrying, all those vehicles we are having, because of the because of that risk should be happening, that is also should cover through a motor vehicle insurance. According to the personal accidental insurance, it will come under the another type of a general insurance. According particular personal accidental insurance, here whomever opting for the personal accident insurance policy, that time the particular duration, whatever accident happened, the person was a disability, maybe the person was a death, so the death, according to that how much amount they're insured, that much of amount should be paid to that personal accidental insurance. For example, some person was disabled because of a lost leg, any eye, any hand, so that time that person whatever compensated the whatever amount they were insured, all these all the amount will insure compensated by the insurance company. And according to the health insurance, at present, most of the cases, most of the people, that is maybe whether that is older people or middle aged people or children, they have to face so many health problems because of that, the climatic condition, the stress, the strain, the changes of environment, everything. So according to that, definitely we can take some insurance policies because based on the health. So whenever we are taking a health insurance policy, it provides either a direct payment or a reimbursement. For example, suppose we are injured, we are met with an accident, we are injured, and that time we are admitted in a hospital, and we spent whatever amount we are having, but whatever amount we are spent based on the accident, that everything should be reimbursed while we are taking the any accidental policy. And not only that, whatever, suppose you are a disabled person, you are taking a long run nursing, so that time whatever amount you are spending for the nursing and the custodial care, that amount also you can reimburse from the insurance company while you are opting the insurance policy. And according to the health insurance policy, we have a individual health insurance, we have a group health insurance, we have a critical illness. Critical illness means any heart attacks, any kidney failures, any cancers, anything. So these type of diseases, we have to require huge investment on them, and all the amount should be provided by the who are opting the critical illness. So according to the health insurance policy. And sometimes we are paying daily allowances to the daily payment to the hospitals. Whenever we are opting the daily, how much amount we have to pay, that means also we can recover from the insurance company. And according to this is not a compulsion on the customer to renew his policy again. Maybe already I told that general insurance policy, you have to take a policy for the particular period. After finishing the particular period, maybe if you want, you can if you are interested, you can continue, otherwise you won't continue that. But according to the general insurance, whatever period you are taking insurance policy, that period whatever risks you are having, that risk should be covered through the general insurance. According to the motor vehicle, previous we have a particular tenure. At present they are given that the two wheeler you have to take up to 5 years insurance policy. According to the premium you have to pay those 5 years, whatever risks you are having, you have to, and you will get from the financial assistance from the insurance company. After that you have to continue, you have to renew that is a mandatory. Without insurance you won't ride your bike on the road. But according to the health insurance, you are interested, if you are interested you continue, otherwise you won't. And another miscellaneous insurance, above other than what about the remaining, all it will come under the fidelity insurance. Insurance generally it is nothing but an assurance and guarantee. While you are taking insurance policy, any risk will be happening, definitely the insurer will pay you that much of risk, that is an assurance. But according to the fidelity insurance, this is not a contract, this is also given some guarantee also. Especially what guarantee means here, it does not mean the guarantee of employees honesty. And generally this type of policy will taken by the employer and employee. Employer will take that, because of that every time you won't tell that the employer honesty. So that's why this type of policy will helpful for the employer whenever any damage, any loss resulting because of the employee dishonesty or disloyalty. So that time the risk should be covered to the fidelity insurance. And according to the crop insurance, mainly this type of insurance policies will framed from the, especially they should be concentrated the farmers, because of that farmers they have so many consequences they have to face because of their because of their crop. Maybe sometimes if they have a very good crop, unfortunately they have to failure because of the droughts or floods or different type of the tufans, all those. So that's why these farmers will take some crop insurance insurance policies. Whenever any damage, any loss occurred, that time the crop insurance policy will be compensated how much amount you are invested on that. So that is very helpful for the farmers. According to the burglar insurance, at present most of the people they have to take, because of that whatever damage, whatever loss happened due to any theft, any larceny, any burglary, any house breaking, all those should be covered while we are taking the burglary insurance policy. And according to the cattle insurance, mainly they should be concentrated who are having a cattle, who are having an animals. Sometimes because of environmental pollution, because of a different type of tufans, some animals should be died. So because of that, we people, while we are taking a cattle insurance policy, that time any death of cattle like any bulls, buffaloes, cows, and heifers, all these we should cover through a cattle insurance policy. The cattle insurance policy will give you a financial compensation. At the end of the miscellaneous insurance policy is nothing but a cash in transit. Generally, while we are carrying the cash one place to another place, anytime anytime the cash should be stolen by some people or dropped by somewhere, that time we have to face some risk. So that type of risk we should cover while we are taking a cash in transit. So whatever the loss of money or cash is stolen from his business premises, or while it is being carried from R to the bank, maybe from to the bank, maybe while we are doing a business, we have to do so many transaction with the bank, while we are depositing, while we are with it, and we have to carry huge amount from the bank. So that time while we are carrying, maybe some people they can stolen. So we lost our cash. Then what we people have to do that whenever we are taking cash in transit, that time whatever loss should be happening, that loss should be indemnified the insurance companies. So all this it will come under the classification of insurance. According to the insurance, people will compensate whatever loss, whatever risk should be happening according to your subject matter. Maybe a life, you should be life. It won't indemnify your loss, but whatever risk happening, that risk should be compensated in a financial compensation. According to the general insurance, whatever loss it should be occurred, how much amount of policy you are taken, that much of amount should be indemnified, and that loss should be covered by the insurance company. So this is a brief description regarding the classification of insurance. Thank you.